The Reserve Bank of India's biannual monetary policy report has projected 7.8% growth for the Indian economy in FY23. Provided the monsoon next year is normal, supply chains are restored, India has completed COVID-19 vaccination of its citizens, and there are no exogenous factors. While announcing the review of the monetary policy on Friday, the RBI's 6-member Monetary Policy Committee retained the growth forecast for FY22 at 9.5% and lowered its projection for retail inflation from 5.7% to 5.3%. Let's look at the 10 most important takeaways from the RBI report. India's economic activity has been normalizing since June 2021 with the ebbing of the second COVID-19 wave, relaxation in restrictions, and improvement in the vaccination rate. Urban demand is likely to accelerate with the release of the pent-up demand. The government's focus on capital expenditure and reforms push, and large FDI flows provide a conducive environment for investment activity. There are signs of an increase in investment pipeline in the rest of 2021-22 and the coming year. Professional forecasters survey sees real GDP growth moving from 20.1% in Q1 of 2021-22 to 5.9% in Q4. It could be 13.1% in Q1 of 2022-23 due to a high base effect and 6.1% in Q2. 3-month ahead median inflation expectation for urban households came down by 50 basis points and 1-year projection by 60 basis points in the September 2021 round of the RBI survey. Manufacturing firms polled in the July-September 2021 round of Industrial Outlook survey expect the cost of raw materials and selling prices to increase further in the October-December quarter of 2021-22. Upside risks emanate from persistence of supply chain disruptions, any further hardening of global commodity prices, especially that of crude oil. Downside risks arise from an earlier than expected mending of supply chain disruptions, the persistence of weak demand, and a slack in the economy. Money market rates consistently traded below the reverse repo rate. The weighted average call rate, the operating target of monetary policy, on average traded 17 basis points below the floor of the corridor during the first half of the current financial year. Riding on surplus liquidity, commercial paper issuances increased substantially to Rs 10.1 trillion during the first half of FY22, compared with Rs 7.9 trillion during the same period last year. Commercial paper rates generally traded above the reverse repo rate, with an average spread of 46 basis points. Crude oil prices turned volatile since the second week of July. The dollar strengthened on the expectation of a US taper. Emerging market currencies depreciated after peaking in the second week of June, mainly due to the retrenchment of capital flows. If crude oil prices are 10% above the baseline, domestic inflation may be 30 basis points higher than the baseline and growth around 20 basis points weaker. For the rupee, a 5% depreciation from the baseline may increase domestic inflation by up to 20 basis points, while GDP growth could get a 15 basis point boost from increased exports.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.